So as expected, the Bank of Canada has held its overnight rate to 5%. In this video, we're going to discuss the recent GDP numbers, talk about the Bank of Canada's recent move. Are there future rate hikes to come? And what does this mean for the housing market? If you're new to this channel, welcome. My name is Justin Conoco. With my amazing wife, Shannon, we own prime real estate located in southwestern Ontario, Canada. On this channel, we cover all aspects of the real estate market and give you data from boots on the ground. We don't have commission breath. We don't need you to work with us in order to pay the bills. So the advice we're giving you are what we would be giving our clients and family. But if you do want to work with us, connect with us at the information below. We're getting calls every day from this channel with people just like you looking for advice on the real estate market, particularly southwestern Ontario, Canada. We cover all aspects of real estate, residential, commercial investing. So the focused diversification that we do gives us the ability to be impartial to what's happening in one individual sector. Also, we represent people all across the planet. We're doing referrals to Florida, Texas, UK, Muskoka, BC, Israel. If you're looking anywhere on the planet and you need the best agents, contact us and we'll connect you with our prime partners. So the headline reads, the Bank of Canada maintains their policy rate, but continues quantitative tightening. I'll skip right to the end where they actually indicate that they remain resolute in the commitment to reduce or restoring price stability for Canadians. But the recent announcement to hold the rate came as a bit of a surprise to people. So before the GDP numbers came out last week, people thought for sure it was going to be a quarter-point increase based on their attitude at the last announcement. They seemed resolute to get inflation down to 2%, but they received so much flack during the last announcement because housing costs are one of the largest contributors to inflation. Now, the core inflation number is running at about 3.5%. But again, if you take housing out of that, there's going to be a lower number that we're looking at for actual inflation. But the slow in economic growth is the reason for why they held the rates. Looking at what's happening in the States, it seems like things are stronger stateside and they're actually experiencing some sort of growth. So now they seem to be in a little bit of a limbo of, well, if we increase the rates and we beat the housing market up even more, that's going to slow down the GDP growth. And the only way that they tend to increase productivity in GDP and spending is by lowering rates. So most economists saw this coming. So after the GDP numbers came out last week, economists were saying that they forecast that they're going to hold the rates because they can't have a non-productive society. And obviously increasing rates is going to further the stress on the housing market. Now, what does this mean for the real estate market? Like I said, we are boots on the ground. So we have been in the trenches since this cycle started happening last May. Now, real estate is very sentiment driven, and just like little kids playing soccer, as the ball would get kicked out and the pack would move, last year, all through June and July, we experienced a vast sentiment shift where the light switch absolutely went off. Nobody wanted to do anything because they didn't know when the end was in sight. In December, they got a little bit of daylight, and all of a sudden, less massive increases to the interest rate were happening. And then January through May, things got crazy again, and people in major markets were acting like the ATMs were printing off money. We were screaming from the rooftops and on this channel that this is not over, right? I still think it's going to be bumpy for the next 6 to 18 months, but people are planning for the next 3, 5, or 10 years. And the conversation from a real estate perspective really is, what situation are you in today? If you are somebody that has a renewal coming up next year, you definitely want to be having a conversation with your power team in terms of what does that actually look like. If you're hoping for February 2022 prices, they're probably not coming back for some time. I would hedge on 3 to 5 years to be safe, if not longer than that. But the conversation for people that wanted to get into certain neighborhoods and markets is, well, if they're holding rates now, and let's say they even do one more increase this year, how long before you think they really want to affect the GDP and increase spending and start lowering rates? And if we get back to that 4 or 5% range for the mortgage you're actually getting on paper, what does that do to the housing market? The elephant in the room is the pullback in the GDP growth can largely be attributed to new home construction. Every real estate transaction contributes about $55,000 to the Canadian GDP. Now, if you think about development charges and taxes and the highest percentage of the cost in any new home, it's the government, right? It's actually the taxes that you're paying for that new property. So if they really wanted to bring prices down, maybe they should look at optimizing the workflow and give that money back to the consumers. But regardless of that, what do you think happens when they start lowering rates again and there's all this pent up demand and less houses have been brought to market? I think it's going to be an absolute bloodbath in a couple of years when they realize you have way more people coming into the country. You have people that are now in a range where they can actually afford to purchase homes and way less homes available. That's a very different conversation. I would say be very careful about what you're reading in the headlines, what you're watching on YouTube and TikTok, and just be aware of the macro conversation, but look at the micro opportunity. Ask yourself, where are you at in your real estate journey today? Yes, I own a real estate brokerage. No, I'm not trying to sell you anything. I would rather give you advice that I would actually give to the people that I love and care about. If you enjoyed this video, smash the like and the subscribe button. We're going to be doing a full market update shortly to dig into the data and show you what's actually happening in the different markets. A lot of people that are just waiting for the crash may be shocked to see where things have been over the last couple months in our territories. Again, if you're looking to find a home in Southwestern Ontario, Canada, just click the links below, connect directly with our team. We would love to service you. If you're looking for an agent anywhere on the planet, we can help connect you with some of the best and brightest on the planet. If you're looking in Manhattan, I've got a direct line to Mr. Ryan Serhant himself. If you're looking in Texas or anywhere else on the planet, let us know. Definitely, if you're looking in Muskoka, we have some great connections up there, and I'll catch you on the next update.